If you want to learn what's going on in the stock market, that's by reading stock charts, then you've come to the right place because that's what we teach. And we see as far as the markets went today, we see stocks are mixed. The S&P 500 is down. The Nasdaq 100 is up, but a little bit on both of those charts. We see that bonds are up about 0.5% and gold's up just a little bit. Let's first jump into the S&P 500. Remember, those are 500 big companies. A big chunk of the volume in the market is represented by SPY. This is an index fund that tracks the S&P 500. We had something called a weekly vertical crossover. That's when the price percent oscillator on our weekly chart crosses over the red signal line. It happens when things are going down in the market and when things are going up in the market. The last one that occurred back on the 25th of January. And we are going into the 5th week since then of decent up movement. And again, somewhere around an opening that next week around 160.89. We didn't get in right then because the market was struggling a little bit. We got in a little after that, but reached the highest high we've seen so far, 281.31. So pretty nice difference there over the course of what, the 25th of January up to the 26th or so of February. Not a bad move. That's the beauty and the magic of the weekly vertical crossover. Derivative oscillator still gaining upward momentum. Our price percent oscillator still heading up. We're so far 2 days into a 5-day candle. That's the weekly candle. And remember, we don't call candles until they're drawn. On our Heiken Ashi candlesticks, we've got a nice strong candle moving up. Price is well above our weekly trend lines. We use trend lines a lot to help us. Again, each of the charts, the weekly chart, the 2-day chart, and the 4-hour chart. We use trend lines on the 2 biggest charts, and we use candlesticks on all of them, and we use the price percent oscillator and derivative oscillator to help us see the big wave. That's the weekly chart. The intermediate wave, that's the 2-day chart. And the small wave, that's the 4-hour chart. So we know what's going on in the market. All these charts all the time. And we are looking for trends. We want to get into a trend once it's established, ride it in whichever direction it's going. And you might say, why would you want to ride a downtrend? If you look at the S&P 500, there's another ETF available to practice trade. And again, we're not a stock calling service. We're an education firm. We want you to practice with us. But if you look at something called SH, it is the ProShares short of the S&P. What does that mean? Well, let's take a look at it. Bingo! When the S&P is moving up, SH, the short, is moving down. The opposite is true. When the S&P 500 is moving down, SH is moving up. So you have options if you develop just a wee bit of sophistication. So as this market's been going up, of course, we have been practice trading and riding up quite nicely the S&P 500, continuing to move up. Now, again, for the day, down a little bit, 0.07%. We look at that 2-day chart. And again, we just finished drawing the latest candle on Monday and Tuesday. 2-day candle is, of course, 2 days. Price movement is above that 2-day trend line, well above the weekly. Derivative oscillator is losing just a little bit of energy. We see the price percent oscillator still moving up. It is flattening as time goes along. So how much more up movement do these charts have? We don't know. If we look at this 4-hour chart and try to see where it's topped out before, we can see on 2 occasions it's topped out about where it is now. Back on the 2-day candle ending the 8th of November and the 2-day candle ending the 4th of December, topped out right around the mark of 180.40, something like that, somewhere in that neighborhood. 181.22, 180.40. So somewhere around right where it is now. So let's just continue to watch, see what we see. We go from and again, we're always trying to look for ceilings and floors where things have topped out before and where they have bottomed out before, because when things move above those previous ceilings or below those previous floors, sometimes they continue to move in that direction. And sometimes these really are ceilings and the movement sort of stops. Why? We don't necessarily know why. We don't really care that much why. We want to find places where movement stops in one direction or the other because it helps us figure out where price is going. So we are going from the 2-day chart to the 4-hour. And of course, as we look at that 4-hour chart, we can see that things topped out back on the morning on the 25th of February. That was this last Monday, and have really been moving down and sideways since then. Saw the S&P down in the morning, up a little bit on those Heikin-Ashi candlesticks in the afternoon. We see the price percent oscillator pulling away from the red signal line and the derivative oscillator gaining downward momentum. So keep your eye on things. Again, our bigger charts are looking a little weaker on the 2-day chart. Just a little bit, and that is from the price percent oscillator, softening some. That weekly chart still strong. So again, every change starts. What is that? The trend is your friend until the end. So you want to make sure you ride it as long as possible, but once it ends, that you don't ride it down and lose what you've gained. So we look at that 4-hour chart, and again, it could just be backing up a little bit. We've seen some backups and then continued up movement, but just be careful, particularly where we see the blue price percent oscillator pulling away from that red signal line and the derivative oscillator accelerating down. We have to be careful. So just watch. Again, one telltale sign you might see is if we start seeing a violation of the 2-day trend line. That's another potential problem. So keep your eye on things if you're in a practice trade on the S&P in the morning, and let's just see what we see. So we go from the S&P down a little bit for the day, 0.07%. The Nasdaq 100 up for the day, 0.10%. And again, a decent candle forming for the week. Derivative oscillator gaining upward momentum, price percent oscillator heading up. We go from the weekly to the 2-day. And again, we see things as far as the price percent oscillator. It was flatter on the prior 2-day candle. This one, it's moving up a little bit more. However, the derivative oscillator is continuing to lose momentum. 2-day candle, though, looks pretty nice. It had really been sliding sideways over about a 4-day period from where it had bumped up on the 15th, the 2-day candle ending Friday the 15th. But then we see this latest 2-day candle representing Monday the 25th and Tuesday the 26th is a nice bump up candle. And again, that's nice to see. Price movement is above the 2-day trend line and well above the weekly. And then let's take a look at the 4-hour chart, our smallest chart. We see that it's actually starting to pull away from the red signal line heading down. That's primarily because of the down movement in the afternoon on Monday and then again Tuesday morning. Derivative oscillator, however, is gaining upward momentum. So just keep your eye on things as this sideways slide is underway. Price again is still above on that 4-hour chart, above the 2-day trend line. So just watch, pay attention if you're in that trade as things are moving up. We've seen the Nasdaq 100 move up, level off, move up, move down, level off, move up, level off, move up, level off. So again, at some point it'll stop going up, but look to those bigger charts to help you make that decision. And you say, well, what exactly do I do? Folks, that's why you need to practice 10 minutes every day with us, filling out your daily market worksheets that are available for free in the show notes. If you're not a subscriber, subscribe to chartingwealth.com. You can get our email every day with our training video and with our show notes where you have PDFs for the daily market worksheet, the weekly market worksheet, and that very important trade worksheet where you keep the results of your practice trades. We have things like entry points, the time that you jump in, the date, the price that you jump in, the reason for jumping in, and then notes during the trade, the reason for your exit, profit or loss, time in the trade, and really important, lessons from the trade. If you'll keep up with that, you will accelerate your training to hyper levels. But it's going to take you working on it. There is no magic. Anybody tells you there's some kind of magic and a fairy will come and sprinkle market knowledge over you and charting knowledge over you, just magically, you're listening to the wrong people. They are lying to you. You have to practice. You have to work. And again, not a lot of time. Dedicate 10 minutes a day, 5 days a week. You will find that it will pay crazy good dividends. Lots of good training at the website, chartingwealth.com. And of course, if you want some of the specialized training that we have to offer to our Patreon supporters, sign up for that. You can also buy our book if you want to know what we're really talking about, the basic knowledge, Charting Your Way to Wealth. It's available also. You can see a link in the show notes. Now we're leaving stocks, going back to our weekly chart. We're going on to bonds. Some people say, why do you follow 20-year bonds? Because bonds tend to be a safe haven when stocks start to crash. Money goes out of the stock market into bonds. So we follow bonds, and then we, of course, follow the commodity of gold. We try to get a nice broad view of things. We think it's intelligent to have options. So let's see what's happening with bonds. We look at the weekly chart, and again, pretty much flat. Derivative oscillator losing upward momentum. And we see that so far for the week, we have sort of a red spinning top, means indecision, tending down, pushing through our weekly trend line, sitting right there on it. So again, bonds weakening. We had some strong up movement in bonds when we had that weekly vertical crossover back on the 30th of November of last year. Bonds went up, what is that? 5 weeks of strong up movement from an opening after the weekly vertical crossover of 114.68 to a high of 123.96. And again, that was over 5 weeks. Is that not beautiful? Is that hard to see? Is that hard to figure out? No, it's not. It's not at all. So again, let's always be focused on the things that work, that you can find in chart after chart after chart. And the weekly, of course, was beautiful on this last chart. So we see the weekly weakening, and we see the week being a weak week so far. How do you like that? Let's go from the 2-day chart. And of course, we see a real sideways slide that's been going on for many, many days. After a drop off and a little bit of a climb up, we see that we had a 2-day crossover going down on the 15th of January. And when you have 2-day crossovers, of course, if the weekly and the 2-day aren't moving in the same direction, we don't have a trade. So we've not had a trade for all this time. Waiting for things to sort out. Derivative oscillators negative, price percent oscillators pulling away from the red signal line. We're simply waiting for things to sort out in bonds to get back to some movement that we can track. And guess what? If we can't track movement, we can't find a trend, what do? We keep our virtual money safe. We don't trade unless the charts allow us to do that. Now we see the 4-hour chart appears to be heading up, potentially for a crossover going up, but until the 2-day is moving in the same direction as the weekly, we don't have a trade. So we're just continuing to watch up in the morning, up in the afternoon, bonds up 0.5% for the day. But again, it's making no difference on what we're doing with it right now. We're just watching to see a pattern get established again. So we go from bonds, lastly, to gold. And of course, if you look at the beautiful weekly gold chart we have, if you're a gold bug, you like gold, why wouldn't you just tune in to our charts? Pay attention to those things. And you can go back, heck, over a year. And you look at the times that our charts have worked and the times they haven't worked or only worked for a very short period of time. Few and far between. Where they've worked for many weeks on end, either with down movement in the market or up movement in the market, they're magical, aren't they? And of course, these last 2 moves with extreme down movement after the weekly vertical crossover and pulling away from the red signal line starting, well, the crossover was back on the 16th of March of 2018. And then, of course, the real pulling away started, in April, around the end of April, and then just the drop-off in gold. And, of course, with this latest upshot in gold, we had the crossover back on the 5th of October. And, of course, it's gone from somewhere that following week at about 111.90 to a high of 127.21. Now, is that not beautiful, my friends? The beauty of the weekly vertical crossover. So what do we see happening right now? We see some weakening gold. We saw that happen back on the week ending the 18th. Market just sort of digested maybe some gains and then popped up for 4 more weeks. We do see a red open box candle. It's not a down candle, but it does mean some weakness. That's what we see so far. Gold was up for the day, 0.17% derivative oscillator, losing momentum. Price percent oscillator, again, flattening out a little bit. Not flat yet, but not going up at the great angles it was back in late December, early January. But we're just continuing to watch, see what we see in gold. We go from the weekly to the 2-day. And of course, we see over the latest 4 days, we saw a red spinning top after gold popped up with a 2-day crossover. We saw things pop up to a high of 127.21 and then sliding sideways since then. This latest 2-day candle did not cross over going down, just sort of laminating on that red signal line. We go from the 2-day chart to the 4-hour, and of course, gold is in that pullback that we were waiting for. We saw gold crossover going up back on the 15th. Of course, we didn't have that 2-day crossover until the afternoon of the 20th. This is all in February. And then we've had what we call potentially a pullback. In other words, gold is heading down, waiting to see if there's going to be a crossover going up on that 4-hour chart before that 2-day chart crosses over going down. If that's so, we're primed to jump into an up movement on gold. So get ready to practice that. Keep an eye on this 4-hour chart. See if that occurs. Weekly still in a confirmed up move. 2-day still in a confirmed up move. We need that 4-hour chart to cross over going up, and you can do a practice trade in gold. See how that works for you. Fill out your trade worksheet and pay attention and learn. Folks, that's where we are as we continue to follow these charts every day. I hope you're getting a great deal out of this. I hope that you are practicing. I hope that you are seeing that if you can master the charts, you can really, really do well for yourself. But you have to become a charting master first. That requires lots of practice. That doesn't call you to take real money and go out and blow it. We want you to practice with us. We want you to learn everything you can from what we teach and everything you can from all the books and everything else you study. Put it all together. Come up with your own personalized method of what works for you in your time and schedule. And then, and only then, once you feel comfortable, you've proved yourself to yourself, would you even think of considering spending real money in the market? Folks, that's where we are as we end the day on Tuesday and go into Wednesday, the hump day. Thank you so much for being with us. We love to hear from you. cw@chartingwealth.com is our email address. Buy our book. Become a Patreon supporter. If you're a Patreon supporter, of course, what do you get? Lots of great stuff. You get our short chart training. You get our Bitcoin training. You get our Bitcoin chart. You get our quarterly training and quarterly chart, all sorts of great stuff. And depending on the level, you can even get a free book. You can even, with 3 months of our intermediate sponsorship level, you'll even get a year's supply of our spiral-bound traders' journals that include our daily market worksheet, weekly market worksheet, and trade worksheets. My friends, we appreciate you. Hope you appreciate what we do, how we try to keep it simple but straightforward. That's what it's all about. God bless. All the best from the whole team here at Charting Wealth World Headquarters.